Hey everybody, welcome to the National Real Estate Post. I am your host, Frank Array, here with Barry Habib once again. Before we roll into a lot of really good information for you guys, we want to remind you that Barry and I are hosting a webinar tomorrow with Angel Oak. And this webinar is on how to get into real estate offices to make presentations to the whole office, which is something that's really important for us to do as loan originators. And then when you're in there, what do you talk about? And then how to best take advantage of that meeting after you've done it, how to reap the benefits of it all. So we did one before. We had a lot of people on it. We had, 1,500 people registered for that webinar, or whatever the case may have been. And there was a lot of people there. We had some technical glitches that, kind of got in the way, but we kept going. But we're doing it again, and it's going to be awesome. So we'd really encourage you guys to show up. What are your thoughts on the webinar?
I thought it was an excellent webinar. We had that little brief period where there was a small technical glitch, but everybody hung in there. It was great, but I think people really enjoyed it, and I think people will enjoy it.
Yeah, so what you're going to do to register, guys, is there's a banner on your screen right now over on your right, Angel Oak banner. Just click on that. You can register. Or if you're watching us on Facebook, there's a link up above. You can click that and register. So be sure to be there. It's tomorrow, 10 a.m. Pacific time. Not only that, but at the end of it all, you get a bunch of goodies for free, and Barry has a special gift for you as well for free, just for attending the webinar. So don't miss out. I mean, it's going to be great. So, Barry, what's new? How's the market? What are we looking at here? Let's talk stocks and bonds. What's happening there?
So, what's interesting is we had been talking about this level of 2.18 on the 10-year Treasury, and a few times just this past week, we've seen the 10-year Treasury, and at the end of last week, hit right on 2.18% and kind of stay right at that level. I mean, vacillate a tiny bit beneath it, but it's an important line in the sand. And it doesn't just tell us a lot about what's going on with mortgage rates and the bond market. It also tells us a lot about the stock market. And we know that stocks and bonds are at opposite ends of the spectrum. As money comes out of the stock market, it'll find its way to be parked in bonds and vice versa. So therefore, when we see 2.18 on the 10-year, it's a real important barrier. If 218 is broken to the downside, not only does it tell us, hey, we're in for some lower rates, that's a good thing. We'll probably get to 213 or 210. It's starting to get really low once again. But it also tells us that the weakness in the stock market is for real, and it will persist at least a little bit longer. 218 holds, which it's been really stubborn in holding lately. If that does hold, then what we will see is more than likely stocks begin to rebound. It shows us that the weakness in the stock market isn't as bad, and stocks will rebound. So this will tell us a lot. We're at a very interesting time here, especially in a week like this where you don't have a lot of economic moving data, but you have more stuff that's more housing related data. It's not going to move the markets, but it's really important for us to take and break down. Now, later on this week, we do get the Jackson Hole meeting. We'll be hearing from Yellen and Draghi and the central bankers. I believe that September is going to be very important. Well, they'll announce the beginning of some sort of a tapering, what we like to call quantitative tightening, the opposite of quantitative easing, where that $4.5 trillion balance sheet starts to very slowly get reduced instead of being maintained at a certain level. I think that maybe gets announced. I'm not so sure if they implement it right away because, as you said before we even started the show, it seems like the Fed's a little worried about inflation not hitting 2%. I mean, just think about how ridiculous that is. The Fed's got this number in their head. Inflation needs to be at 2%. Well, why? Why? I think when you drill down, it's that central bankers are very fearful of deflation, which could be a bad thing. So they probably think in their minds that a 2% cushion is good. But here's what they're not thinking, Frank. And it's something that every listener knows, I know, is they're not taking into account the amazing impact of technology. Just think about how much more productive we are, how it literally keeps costs down. We are becoming so efficient thanks to technology that we're finding ways to keep costs from rising.
Yeah.
And this doesn't mean that there's no inflation. There is inflation. It's just that technology is really doing a lot to combat it. So I don't think central bankers should get hung up on the 2%, but they are. They're also hung up on this Phillips curve thing where they think that, okay, because of tight employment conditions, you're going to see wages rise. Maybe that will happen. It hasn't happened in a long time, but we'll see. Once again, I think technology is doing a lot there to keep costs down, keep wages down, keep inflation down, and I don't think the Fed's got the modern day mentality, so to speak, to kind of see that.
It's probably going to take those guys a while to catch up and figure that stuff out, isn't it?
It is, and what that means for us is that means that if they are trying to influence inflation, then they'll be more dovish because if inflation stays low, that's the enemy of the bond market. I'm sorry, it's the friend of the bond market. Inflation is the enemy of the bond market. So as inflation stays low, it means while interest rates will vacillate, while interest rates will more than likely rise a little bit because of the quantitative tightening, we're all in for a good time as far as interest rates go. It's not going to adversely impact housing. That brings us to another point.
Right.
For many years we've been talking about the strength in housing. I just got to say this. I just recently posted on my Facebook page an interview on CNBC from a few years back where everybody was, hey, look, the housing market, blah, blah, blah. They were pretty much anti-housing market. I said, look, this was 4 years ago. We'll probably average 6% appreciation. And sure enough, we've averaged exactly 6% appreciation. So looking back upon it, the factors that were in play then are still in place now.
Yeah.
Those same fundamentals, really strong demographics, really tight inventory, looking at builders not being able to keep up. And people who talk about a housing bubble have to remember this. For a bubble to occur, you need something to sell. People that are watching this video know that inventory levels throughout the vast majority of the country are really tight right now.
Yeah.
So we're not in a bubble. You mentioned something on the show that you guys had put out yesterday. It was excellent. And you mentioned something about inventory levels. And I think you're right. Inventory does increase a little bit, but the way it happens is through home prices appreciating. And those individuals who are either underwater, which is diminishing, but there's still a lot of people who are above water, meaning that the value of their home is greater than what they owe. However, it's not enough to pay a realtor and to put a down payment down. As appreciation continues, they will then be free and able to sell their home. So there will be more inventory. Now remember, when they put their house on the market, they also increase demand because they become a buyer.
Right.
But you're going to see some additional inventory as the appreciation of homes continues, which it will. I mean, we are in for just such a good housing market for quite some time.
Well, that's awesome information. I'm glad you touched base on that too, because like I said on the show, my wife is actually selling real estate right now. And dude, she's got these buyers, I swear to God, and I get to go with her. You know what I mean? So now I'm a real estate agent too. You know what I mean? So, dude, I looked at like 30 houses over a 3-week period of time with these guys, and they're making offers. And the sellers, what they're doing is they're just letting offers build up, and they'll get like 15, 20 offers in. They go, okay, we're going to look it over there. We're going to see. And then they go through these offers, and then they pick the one they want. So it's really tough if you're a buyer right now. But my point was to just stay with it, stick to it, keep going, keep finding them. These guys eventually found the house. They got an offer accepted. I mean, it's just more work right now with the lack of inventory. That's just the way it is. So
it's worth it, Frank. And I agree with you 100%. I think you're so right. And the points that you bring up are spot on because, yes, it is worth it. You do have to stick with it. People do get fatigued. And here's an interesting thing for sellers out there and real estate agents that listen to the show. By the way, I commend you guys because taking people out to look at homes, it's exhausting.
Yeah, oh yeah.
So when you're selling a home, just think a little bit out of the box. And instead of what most people try to do is I want to list it for the highest amount. What if you intentionally listed your home a little below market value? What happens if you did that? What do you think would happen?
Well, you're going to get a lot more offers, more than likely.
And then you're probably going to be in a bidding war.
Oh, yeah, you will. Yeah.
And if you're in a bidding war, not only will you sell your home quickly, but think about it, you'll probably get more money for it.
More than likely.
And you won't have to give up any terms.
Yeah.
So it's a little bit of a different thought process. So it's a leap of faith, but it works.
There you go. All right. Well, thank you so much, Barry, for being on the show. Appreciate your information as always. Guys, do us a favor. Leave us your comments down below. Barry's busy, but if he sees them and he has the time, he'll probably respond to you. Also, down below, there's a link where you can try out MBS Highway for free for 2 weeks. We suggest that you do that. Don't forget to come to our webinar tomorrow. That's going to be a blast. Subscribe. If you're meeting us for the first time on Facebook, there's a link above. And on our page, there's an orange button. And with that, we're going to get on out of here. Thanks again, Barry. We'll catch you later.
Thank you, Frank. Bye, everybody.